Thank you, everybody, for joining. And we are thrilled to have Matt Hougan as our next guest in our webinar series. Thank you, Matt, so much for joining us. I've been a fan of yours since I saw you present at Permissionless in May down in West Palm Beach before hurricane season. I like your perspective because it's unique by virtue of your company and what it's doing and your role in the company as Chief Investment Officer.
Mm-hmm.
And we were fortunate enough to interview Lynn Alden a couple of weeks ago as our last guest. And she gave a comprehensive assessment of our current global macro environment and put it into valuable historical context. And she believes the current situation is most like the 1940s when the developed countries had an enormous amount of debt and ran high inflation for the following decade. And the interest rates were held below that inflation rate, which caused financial repression and currency debasement. And she said an environment like that is probably most likely what we're going to have over the next decade. And decentralized currencies and stores of value like Bitcoin should be an asset class that would outperform in those conditions. And so with that as a backdrop, we'd love to touch on any or all of the following topics today. And I'll rattle them off quickly, and then you can kind of pick them one at a time, however you'd like to go through them. We would definitely like to know about Bitwise and the characteristics of your customer base to give some perspective on your perspective. We'd love to know what your investors are saying today and what is the level of interest. And the questions coming in today, are they different than what they've been in the past? And what's the character of this crypto winter? Is this a different one? We've gone through 3 others that were this magnitude in one way or another, and is this one a different one? Third, what's the most common investment case for Bitcoin for your clients? Fourth, what are the risks that Bitcoin does not perform the way Lynn Alden suspected it might over the next decade if those conditions were to unfold? Fifth, it's probably worth talking about what's the difference between Bitcoin and other tokens or protocols or coins or whatever you'd like to call them. Maybe what is the best thing to call them. And then 6 would be just spokespeople for crypto often talk about the potential for this technology to be transformative. What is that all about? And is the cryptocurrency thing, is that actually having a real impact on the economy, and how will that unfold? And then finally, love to hear a little bit more about your firm's strategy and how our listeners can find you. And you recently launched an actively managed product with Jeff Park, who I fortunately also know, and was in one of the best podcasts in the market last week called On the Brink, talking about his launch, but curious about how you see Bitwise unfolding in the future. And with that, I'll turn it over to you.
Wow, what an introduction, and what a series of topics. How much time do you have? This is going to be a lot of fun. Thanks so much for having me. I'm really excited to be here and to chat about these things. You know, I can start from the top about Bitwise, just so you know where we're coming from, and then happy to just run through these questions one after the next. The 60-second on Bitwise. We're a specialist crypto asset manager. We've been around since 2017. We manage money mostly for professional investors. So while a lot of crypto is focused at retail, we're really focused at financial advisors, family offices, and institutional investors. We're best known for having created the world's first and running the world's largest crypto index fund. So if you want to make Jack Bogle roll over at his grave, you can say we're crypto index fund providers. But we're also known for doing education in this space. So as 2 examples, with my director of research, I co-authored the CFA Institute's Guide to Bitcoin, Blockchain, and Crypto. And we have a team of 25 people that are out in the field talking to financial advisors every day. We do thousands of meetings. So we tried to provide a balanced approach to crypto, what it really is, what it isn't, what's hype and what's reality, what are the risks and what are the opportunities. And we've been doing it for 5 years. We managed about $1 billion in assets. We've been through bull and bear markets. We've been through hard forks and soft forks. We've been through and observed meme coins and real projects. And that's the approach we like to bring to it. So our primary customer is a financial advisor who has clients who want to allocate to crypto, and we help them do it in a structured way. You asked what investors are saying today and the level of interest, and maybe we'll start there and then we can go through everything else. The level of interest is sky high. We were chatting before the podcast started. Bitwise as a company has more customers today than at any point in the past. We've had positive inflows all year. We have thousands of advisors who show up for webinars. That CFA research brief that I talked about is the most downloaded piece of literature the CFA Institute has ever produced. So the level of interest is huge. More and more advisors have at least one client or two clients or three clients allocating to crypto. Bitwise serves well over 1,000 RIAs and is approved on more than a dozen national account platforms. And so people are moving into it. They're not moving all of their clients into it by and large, but it's becoming normalized to have an allocation to crypto. And I would say that level of interest is higher today, maybe than it's ever been in the past. And people understand crypto certainly much better than they ever have in the past. So the level of questions that we get are much more sophisticated than they were even a few years ago.
On the regulatory side, is there any difference between the crypto assets, or just selling a client a stock or a bond?
Yeah, it's more difficult there are a couple ways to answer that question. One way is it's more difficult for advisors to get access to crypto than it is to most other investments. Mm-hmm. So, I come from an ETF background. You can buy an emerging market ETF. You can buy a frontier market ETF. You can buy a very narrow levered ETF. You can buy a levered commodity ETF, but you can't buy a crypto ETF. So it's more difficult. There's more regulatory challenges. Bitwise solves that by offering a variety of wrappers. So we offer private funds for accredited investors. We offer QP-only funds for institutions. We have publicly traded OTCQX listed tickers. We have private placements, and we have equity ETFs that are picks and shovels plays.
Oh, interesting.
But it's definitely more challenging from a regulatory perspective to get access to crypto than it is most other asset classes.
When you said that the questions are coming in and they're more advanced, what are the biggest concerns?
So one is the regulatory piece that Brendan mentioned. People don't feel fully comfortable with an asset that they don't see as fully regulated. And while regulations have advanced a great deal, I think the lack of complete regulatory clarity in the space is a big piece. And then, people don't know exactly how to value these assets. And I think that's a challenge for people as well. Many of them don't produce cash flows. They don't fit into traditional DCF models. And I think that's a big challenge. And then the final one is, of course, people want to know when the bear market will be over and when the next bull cycle will begin. So they want the magic crystal ball, which would be nice to have.
Well, that's good. We'd like to know that too.
Yeah, we can talk about, I know we'll get to the cycles and the winter at the end. We can talk about what I actually think there, but those are what people want to know. I will say that things have changed a lot since the last bear market, 2018, 2019. The questions we got will crypto exist? They were existential questions. Will Bitcoin go to zero? Will the whole industry evaporate? Those questions are largely gone from the market. Now it's, when is the next crypto cycle happening? When will it go mainstream? How do you value these things? Where is regulatory clarity? Those are the kind of things that people want to know.
I think the regulatory aspect is very interesting because, there's the founders of crypto, don't want any regulation, things like that. But for you really need regulation. I'm sure you have an opinion of what it should be, but in the end, a final ruling of what it is and then how we deal with it is really essential for you, right?
It's essential. I often say that regulatory clarity is more important than regulatory quality. That's not actually a very popular view in crypto, but I do think within the bounds of reason, any set of regulatory findings that help us move forward as an industry, knowing where we can go and where is out of bounds, would be extremely accelerative to where crypto is heading in the future. If you don't know, you're extraordinarily conservative. I'll give a very specific example. A lot of our funds can't hold securities because of the nature of how they're regulated. We spend a great deal of time evaluating different crypto assets to determine are they likely to be deemed a security or
Yeah.
not? Of course, we
Yeah.
can't know perfectly, but we try to make our best guess. Not only does that take a tremendous amount of time, but we are, of course, extremely conservative, or try to be, because if you don't know where the edge is, you can't walk up to it. And so I do think, yeah, from our perspective, you're right that part of the founding ethos of crypto was anti-regulatory, but the more modern incantation just wants regulatory clarity, so the value of the technology can be manifested into the world.
Isn't one of the great strengths of Bitwise, though, that you are taking care of much of the regulatory concerns so that
Yeah.
RIAs can embrace your products? So that
I appreciate that. Yeah, that is one of the things. We try to make it easy for RIAs and other professional investors to invest. So we do things like spend a lot of time and a lot of legal resources on determining what's likely to be deemed a security or not. And then we take care of all the other issues, things even that seem simple, like how do you do crypto asset pricing in a way that's compliant with regulatory standards is not something that a lot of people think about, something we think about a lot. How do you do custody in a way that works? How do you do tax and tax reporting? So we try to simplify all that away and leave people with just what they want, which is exposure to the crypto market in an intelligent fashion. So that is what we're after.
So like at the end of the year, the statement that if I was one of your investors, the statement I get you, it looks, just like if I, had an ETF with you or I bought a bunch of stocks, right?
That is exactly right. Yep. Yeah. You get the same sort of statement from a Big Five auditor, and you'll just plug it into your tax reporting software. So we abstract all of that away. It's just underneath the surface. It's like a duck. Looks very calm.
I can
Underneath the surface, all the Bitwisers are paddling like crazy.
Yeah.
what's the investment case that people are coming in to own? Let's just use Bitcoin alone, your Bitcoin index fund. What are the driving reasons, and have those changed over time?
Yeah, I'd love to talk about Bitcoin and then talk about other assets, because I do think it's very different. The primary way people view Bitcoin is as a non-sovereign store of value and an emerging monetary asset. So I think people see in Bitcoin the same characteristics they see in gold, plus additional characteristics that promise utility, right? You can do things with Bitcoin, like payments, like international transfers, that you can't do easily with gold. And so I think people are investing in that as sort of the value driver. And then as an investment, as an asset, it's an asset with asymmetric returns. It's obviously risky. It has major pullbacks, but it also is the best performing asset class in the world over the last 3, 5, and 10 years. So a small allocation to this asset can do wonders in a portfolio. But I do think what people are looking at it, they see it as an emerging non-sovereign store of value, an emerging monetary asset. They see it going after markets that are measured in multiple trillions of dollars, and they're making a bet that it will win one or some or all of those markets in the future. And they're allocating for that reason.
Do you guys have advice on how much of a person's assets they should put into it?
We have advice on the limit. We think most investors are best off with 5% or less.
Interesting.
And that, I personally have more than that, Brendan, but there's a reason for that, which is, the thing about crypto that's different from other assets is it's enormously volatile. It's more volatile than stocks, more volatile than bonds, more volatile than emerging markets, more volatile than oil. And the way retail investors feel this is that when it falls sharply, they get a pit in their stomach. And if you get a pit in your stomach at the wrong time, then you're going to be forced to sell in a sort of behavioral fit.
Yeah.
And the reason 5% is a magic number is that below 5%, it's not the biggest driver of the maximum drawdown of people's portfolios. Stocks still are historically. So it doesn't create that pit in your stomach feel. If you start putting 10, 15, 20%, and then it falls 70%, as it's done 7 times in its history, you get people panicking and selling. Now, from a sort of risk modeling perspective, a portfolio optimizer will tell you to put more in because it has such a strong historical return. But from a behavioral perspective, I think that 5% number is a pretty good one.
I would also imagine you've had, I suppose 2021 into 2022 is a good example of talking people off of cliffs about their tax bill, because with that volatility, sometimes you can lock in very, very high tax liabilities, and then it drops overnight, and then you don't have the money to pay it.
Yes, yeah, I think that's a big issue, and we certainly talk a lot to people about tax, and the opposite is true here, right? We're talking to a lot of clients right now about tax loss harvesting in crypto, right?
Exactly.
The market's giving you lemons. You got to make lemonade, and let's keep allocated, but how can we harvest those losses?
Right, but that's it just speaks to the value that you provide, where anybody can go to the Cash App and buy Bitcoin and trade. But I've just learned over the years, I used to work at a hedge fund and things like that. Just getting the investment right is an important aspect, but there's so much else that goes into investing money, and tax loss harvesting and efficiency is so crucial.
It's huge. It's huge. And it's one of the few things you can really control as well, right? Whereas the market return is less controllable. So yeah, it's very important.
Yeah, and that's why I found sometimes my investment in the hedge fund, it would be up a lot, but then I'd get my tax bill and it was all short-term gains, and I was like, oh my God, that was a big tax.
Yeah. You mentioned volatility, and what is interesting to note is that in the last 2 months, the volatility of Bitcoin has dropped below that of the S&P and the NASDAQ. And that has happened only 2 other times, right in front of big bull moves in cryptos. Is that something that people are talking about much?
I think that, we certainly talk about it with clients. I think it's a telling statistic. I also think if you peel back and think big picture, it makes some sense. What are we worried about right now in the market? We're worried about layoffs in Silicon Valley. We're worried about earnings misses among corporate equities. The things we were worried about in crypto actually played out in May, in June, in April. Things like over leveraging in the crypto markets. We've already sort of gone through that piece of the economic cycle. So it's not surprising to me that the volatility has been squeezed out of crypto to some degree, and that you're seeing rising volatility in the equity markets, where we're concerned about those earnings issues and those layoff issues and those growth issues. I'd expect the 2 assets to have a lower correlation in 2023 than they have in past years. I think they're going to be on different courses.
At cocktail parties in my neck of the woods, crypto is quite unpopular. The first thing that everybody talks about is how criminals use it, and I don't want to use it for that reason. I'm wondering how often people talk about that.
They talk about it all.
What the responses are, whether people get satisfied. And then another one was a very curious one, and that's basically the hackability, and I find that ironic because it's been the best target for hackers for 13 years, and really nothing has gone wrong with the protocol itself. Hacking has succeeded in the security area, but not in the core. But one group of people are very worried about quantum computing and what that might do. Have you heard that, and what do customers say, and what are the responses?
Yeah, I love all 3. Let's set them up and knock them down like pins, because I think they are all really great points. First, on the criminal use and activity, that's a story from 2014 that won't die. If you look at what the Department of Justice has said recently, or if you look at what chain analysis shows in terms of the percentage of, say, Bitcoin or crypto assets used in criminal activity, it's a vanishing number. It's far below cash. It's far below dollars. It's in the basis point level. And if you want an anecdote that makes you appreciate that, think about the pipeline attack on the East Coast a year or 2 ago. You'll remember that they recovered the Bitcoin within 2 or 3 days. And the reason is Bitcoin transactions are pseudonymous, but you can trace them, and you can trace them back to wallets. And now there's a big regulatory perimeter in crypto. And if it ever touches that regulatory perimeter, you can seize those assets. So it's actually,
I have a lot of friends in the national security, and they want this idea that they want criminals to use Bitcoin.
Right.
They don't want to put the narrative out that they shouldn't use it. They want them to use it for that exact reason.
I tell my friends who bring it up, I beg you, if you're going to commit a crime, don't do it.
Yeah.
You will be,
There's,
you will be
there's a
caught.
record of it. That's what the whole thing is based on.
It's an indelible record. I love that. That's a great anecdote. That's exactly right. So I think that's a strong counterpoint there. I think, you made a great point on hacking and security risk. The core protocol is the biggest honeypot in the world, and it's never been hacked in 13 years. I would argue it's the most secure database in the world. What I try to remind people is that, there are two levels. Like, I keep most of my fiat money at the bank, and my bank has never been, hacked into, but I have a few $100s in my personal wallet, and I could leave that at my kid's soccer game and it would be gone. And the same thing is true in crypto. If you keep, I don't know, $10 million on your phone, that's probably not super smart. But if you have a little bit of crypto easily accessible, and then the rest in cold storage, the crypto equivalent of a bank, you're probably going to be okay. And it's just, people who don't think about that and are doing the equivalent of carrying millions of dollars in their wallet while running around to kids' soccer games and stuff, or walking around late at night. That's not smart. So the core protocol.
So if I invest in you, with you, where are my assets?
Yeah. You want to keep the bulk of your assets in a true cold storage solution. It's extremely secure.
And that's what you guys do.
That is what we do. Yeah, we work with qualified custodians that keep them, and we've been managing $1 billion plus in assets, and we've been in the market for 5 years. And never had an issue. Really, we don't anticipate we ever will. And then the quantum computing one is my favorite. The thing about quantum computing, the reason people get worried about it, and the reason people like to talk about it in crypto, is that it would theoretically break the underlying cryptography that holds the whole thing together, hashing algorithms and RSA cryptography. But if they could break that, that is the same cryptography that underlies how the internet works, how all military communications work, how all point of sale transactions, like, the world will stop if that gets broken.
Yeah, we got bigger issues to deal with.
We have bigger issues
than your Bitcoin.
Yes, exactly.
That's a great answer.
Every communication, every military transcript, every diplomatic cable being open to everyone in the world, and that is the world where we've cracked this code. So the reason to say that is, of course, cryptographers are going to solve that. They're already working on quantum resistant cryptography, and that will be roped into crypto software as soon as it's ready, and before any of these really cool looking James Bondy quantum computers ever pose any major challenge to society. At least that's my bet.
I had the good fortune of sitting with the head of security for one of the largest crypto firms in the world. And I asked him about that. And he goes, I don't spend any time worrying about that, because the people that would use quantum computing to hack Bitcoin would drive the value of Bitcoin to zero.
Yes.
You would succeed
that's a really good point.
capturing a lot of Bitcoin, and then the headline.
So you just stole something that's completely worthless.
Quantum computing did it, and no, it would go straight to zero. And he goes,
that's great. That's great.
This is not a worry of mine.
That's so smart.
The other thing that crosses my mind is that if there's a corporate head of the quantum computing effort, and it succeeds, the legal markets, the legal ways to use that computing power to win economically are so much vaster than the criminal uses of it. That person is going to harness it for the right reasons, I would think. But that gets into human nature.
Great points.
Why don't we talk about Bitcoin versus the rest of crypto, and what should we call everything else? And
great.
What's the demand for that, and how is it different among your base from your products?
I think people get this wrong because of the word cryptocurrency. They think of Bitcoin and Ethereum the way people think of the pound and the dollar, right? Two things that do essentially the same thing. But a better mental model is to think of them as different software companies like Microsoft and Salesforce. Because every crypto asset underneath it has a blockchain that's a piece of software, and that software can be programmed to do different things. So Bitcoin, you can program to send Bitcoin, receive it, hold Bitcoin, destroy it, do some if-then statements. but not much. It's a simple programming interface. It's amazing because it creates non-sovereign money and you can move it around the world instantaneously, but it's got a limited capability. Ethereum, the second largest asset, was built after Bitcoin. It looked at Bitcoin and said, it's cool that you can send $1 billion anywhere in the world and have it get there instantly. What if we could program it like a website? And so Ethereum is a Turing complete programming language that you can program to serve as a decentralized exchange, like a software-based version of the New York Stock Exchange, or a decentralized lending protocol, like a software-based version of your bank. You can program it to do anything. And so Bitcoin is evolving into this monetary asset, digital gold, but Ethereum is evolving into something that's more like the Apple App Store. People are building apps on top of Ethereum that use this global database to do things like build a stock exchange or build a lending protocol or record the deed of who owns what NFT. And those are just very different use cases. And as you go through asset 1, 2, 3, 4, 5, 18,000, what you'll find is that every blockchain is optimized in a different way. Some are similar to Bitcoin and just try to be faster or quicker to settle or cheaper to use. Some are like Ethereum and try to offer this generalized computing service, but maybe they can process more transactions per second. And then some are like niche. It's very similar to the software space, right? Some companies are trying to compete with Microsoft, some are trying to compete with Salesforce, and then there are a billion startups. And what that means as an investor is you should either have a thesis, like I want to invest in crypto because I want to invest in digital gold, and then you just invest in Bitcoin, or you want to invest in crypto because it's a way for money to exist on the internet in a big quotes around that. And then you want to take a diversified approach or find the best protocols. But they're very different assets, Bitcoin and Ethereum. They're not fungible in a sense. They do different things.
And when we think about this idea that it's a technological breakthrough that's going to help transform the economy over time, is it therefore the Ethereum side of that has that potential, and has it affected the real economy yet, and how will it?
Yeah, I think in lots of ways. So it's really both. I can see Bitcoin transforming parts of the real economy as a more useful version of gold, but Ethereum is where you'll see a lot of that innovation. And we've gotten some enormous proof of concepts. So there's an app built on Ethereum called Uniswap. That's what's called a decentralized exchange. You can use it to trade one crypto asset for another, the same way you can on Coinbase or crypto brokerage. And last month, they did $35 billion in trading volume. They have no employees, no offices, no company. I'd say that's pretty revolutionary. There are crypto lending platforms like Aave, where you can get multi-million-dollar collateralized loans in a matter of a second. Try to get a collateralized loan against your stocks in your Charles Schwab account in the next second. I would guess that will be pretty difficult. So I think you're seeing these proof of concepts on Ethereum. I think we're going to see real world impacts in the way that your friends at the cocktail parties will understand in the next 2 years. I think there are already some sort of real world examples that are more tangible. I'd be happy to share a few if that would be helpful. But I do think it's more on the Ethereum spectrum that you're going to get the real world impacts soon.
Yes, I think use cases for those impacts on the real economy are useful.
I have a fun one for you. This is one that I share with crypto skeptics, because you talk about things like decentralized exchanges and their eyes glaze over. But everyone loves music, right? And usually, if you love music, one of the things you love to do is find a band before anyone else. And the reason you do that is so you can tell your friends about Nirvana before Nirvana is big, or Radiohead before Radiohead is big, and you get a shirt and you look cool and you build social credibility. But now in the world of crypto, artists are packaging new music as NFTs, and they're selling those NFTs to fans. And the fans, when they buy those NFTs, get a stake in the streaming royalties. So instead of discovering a new band and buying a t-shirt, you discover a new band and you literally buy a stake in their song. And then as that song becomes more popular, you gain social credibility by saying I own this NFT, but you also gain a financial outcome. And if you think about what that does to the music industry, would a major artist rather sell their music to Sony or sell it directly to fans in a way that make those fans evangelists and that they can then sell concert tickets directly to those fans with no intermediaries? I think it's an amazing proof point, and it's made possible exclusively through blockchain. You can't have NFTs, which are digital certificates of ownership, without a blockchain, and you can't have micropayments without blockchain technology either. So people have put those together, and it's not a Jetsons thing. If you go to royal.io, you can buy these songs from Grammy Award-winning artists that you've probably heard of today, which is pretty amazing. And I think in 5 years, do we think Taylor Swift is going to be selling her music to a major music catalog? Of course not. She's going to be selling it directly to fans, and they're going to be participants in that success. And I think it's going to completely change the music industry in the next 5 years. And that's just one tiny example. I use it because it's intuitive, but it's one example.
It also highlights the whole concept of Web3, where fragmented ownership of lots of different things that has never been contemplated before.
Yes. Yeah.
Introduced into the economy. And when you can own things like that, and it becomes a much more interesting landscape for the economy.
Yes, huge, huge. And then people use their own personal brands to expand those. And it's not just music, it will be books, it will be movies, it will be TV shows. You can imagine how that enables the creator economy in multiple ways. And also how it brings more people into the crypto industry. You might have a friend who would never buy Ethereum, but if they could buy, the latest track from their favorite artist, they would figure out how to interact with the crypto world. So I think it's a good example.
Let's see, what are I guess I'm interested in making sure that we learn about how to contact you and what the future of Bitwise looks like.
I love it.
That's something that you'd like to talk about.
Sure, let's do that, and maybe we can close the conversation on the crypto winter. Bitwise is at bitwiseinvestments.com, so you can find us on the web. We produce a lot of materials, including one that I'd recommend, which is a monthly email that you can sign up for on our website. I like it because it's only once a month. So if you're just interested in staying up to date with what the latest is in crypto, but only have one thing to read a month, it's a solution. You can also find me on Twitter at Matt_Hougan, which has a U in it, so it's HOUGAN. And I tweet there occasionally. Again, we try to be thoughtful in the amount of content we produce and to make it each impactful. So we'd love to chat with folks.
Excellent. Is the launch of Jeff Park an important departure, or is it just a small evolution?
No, I think it's an important addition. If you think of all the great asset managers in the world, if you think of BlackRock, even Vanguard, if you think of PIMCO, they all offer both beta and alpha seeking strategies because they have utility to investors. And Bitwise was built as a beta shop with some intelligent index funds, but there are plenty of really interesting active opportunities in the crypto market, particularly in the absolute return space, which is not a space you can access with passive strategies. And so, we want to be a leading player in both sides of the market. The thing that unites all the Bitwise products is that they're built on a foundation of 5 years of expertise and 70 professionals and expertise in custody and trading, et cetera. And we can layer on investment IP on top of that, whether that's index strategies or absolute return strategies from the likes of Jeff Park. So this is part and parcel of our playbook. It's a big piece of our future, and I'm really excited to see what they do with it.
Excellent. I guess, yeah, so crypto winter, is this a different version than what we've gone through before?
Yeah, here's my 2 minute on history of crypto and where it's going first. I love this so much. You're right. You mentioned crypto's had 3 big cycles. We had the 2011 to 2014 period, the first bull market, and then the first pullback. And that was catalyzed. 2011 was when you could first gain exposure to Bitcoin. So there was a big technological breakthrough. Coinbase launched, Mt. Gox launched. And then in 2014, Mt. Gox collapsed and the market reset. The next cycle was 4 years as well, 2015 to 2018. 2015 was when Ethereum was created. And so that was the technological breakthrough. We had a big bull run through the ICO market, and then regulators shut down that market, and that was the reset. The most recent one, we had 3 big breakthroughs. We had the birth of stable coins, which are like digital money market funds, NFTs, which are digital objects, and DeFi, or decentralized finance. And that catalyzed a lot of excitement. And then we had a reset because of the macro outlook. If you think about what happens next, it's no one knows for sure, but the things that are true in crypto right now is that it has 10x more venture capital investment than it did in any previous cycle. There's a record number of developers building in crypto. There's a record number of crypto users out there, and it's starting from a stronger base with an asset base around today of about $1 trillion. Usually when you put money and smart engineers and new technology into a petri dish and put it under a lamp, interesting things tend to happen. So I'm pretty optimistic that we'll have more product breakthroughs in the future. The only thing that's different about this cycle is that the pullback was macro related, and that certainly can continue to be a headwind to crypto in the future. But I think the secular growth in this space will overwhelm even significant macro headwinds in the future. The technology is just too transformative. The new applications, music being a tiny example, are too interesting. So I think we're going to enter a new bull market. I don't know if it's in early 2023 or it's in 2024, but I think it's relatively close. And I think it'll actually be the biggest one yet. I think it'll be the time that crypto goes mainstream, and I think it'll be pretty fun to be around.
I agree. I was also interested to see that the number of engineers that are operating smart contracts on Ethereum as a percent of total engineers working on smart contracts has been steadily rising. And if you include Solana, it's now a new high.
Yeah.
Very interesting since the merge. I hadn't seen that predicted.
No, but those are the dominant platforms, and people are just now experimenting with everything they can do there. And I think it's going to be really exciting. I think there'll be a sort of flourishing of new applications that starts trickling out into the market early next year.
That's great. Well, Matt, thank you very, very much for a
this was
really
great.
enjoyable and
it.
informative session.
Thanks,
We really
guys.
appreciate your coming on, and we know that our readers are going to appreciate it too.
Thanks for having me. This was a lot of fun.
Thank you very much.